Nvidia has just announced incredibly impressive Q1 FY27 financial results, with total revenue reaching $81.6 billion, exploding 85% year-over-year. The engine driving this hypergrowth? The data center segment. It pulled in an astonishing $75.2 billion, representing 92% annual growth. This revenue was split almost perfectly. $38 billion from hyperscale cloud giants and $37.4 billion from the surging AC segment, AI, industrial, and enterprise clients. Meanwhile, edge computing quietly added $6.4 billion, growing 29%. After a cost of revenue of $20.5 billion, gross profit hit $61.2 billion, maintaining a superb 75% gross margin. Operating expenses came in at $7.6 billion, resulting in an operating income of $53.5 billion. The final bottom line? Net income reached $58.3 billion, representing an extraordinary 211% growth year-over-year. This translates to an earnings per share of $1.87, easily crushing Wall Street's $1.75 estimate. These numbers aren't just an earnings beat. They set the foundation for a much larger structural shift across the entire tech landscape. The generative AI revolution has fundamentally rewired the corporate landscape, and Nvidia stands as the undisputed #1 beneficiary. The revenue trajectory proves it. While edge computing maintained a steady 8.8% compound annual growth rate, the data center segment ignited an almost incomprehensible 210.9% CAGR. The acceleration is relentless, surging from a modest baseline, passing $30 billion, pushing beyond $50 billion, and now hitting $81.6 billion in Q1 FY27. With the data center pillar alone commanding $75.2 billion, this isn't just momentum, it is a complete paradigm shift. Let's break down Nvidia's dominance across 5 distinct strategic pillars. 1. Hyperscale cloud. Revenue hit $38 billion, up 115% year-over-year. Core customers like Amazon, Microsoft, and Meta have expanded their 2026 capital expenditure plans to a staggering $725 billion. Nvidia is capturing the premier share of this unprecedented Blackwell demand. 2. AC and networking. This segment generated $37.4 billion, up 74% annually. Crucially, sovereign AI deployed across roughly 40 nations grew over 80%. On the networking side, revenue exploded to $14.8 billion, a 199% increase, effectively locking customers into the InfiniBand and Spectrum-X ecosystem. 3. Edge computing, generating $6.36 billion. Physical AI total addressable market has surpassed $9 billion. This unified platform is powering Level 4 autonomous mobility partners, including Uber, BYD, and Hyundai, alongside advancements in 6G AI RAN. 4. The VERA CPU platform. This is the market disruptor. The first CPU purpose-built for Agentic AI opens a massive $200 billion total addressable market. The custom 88-core Olympus architecture features a 3.4 terabytes per second fabric that eliminates latency, delivering 90% better performance over traditional x86 CPUs. 5. Financial strategy. The entire ecosystem is protected by the CUDA software moat, which locks in 98% of AI developers. This translates to a 74.9% gross margin and nearly 60% free cash flow margins, funding a massive $80 billion capital allocation program and a 2,400% dividend hike. This multi-year momentum is being driven by a convergence of massive structural forces. At the core is the AI supercycle. Hyperscaler capital expenditure is scaling aggressively, projected to surpass $650 billion by 2026. With roughly 75% of those funds directed exclusively into AI infrastructure, servers, GPUs, and data centers, Nvidia is capitalizing on this exact inflection point. Beyond the hyperscalers, rapid market expansion is reshaping the revenue base. The complete loss of Chinese market revenue has been entirely offset by an explosive surge in sovereign AI and the AC segment. Simultaneously, the strategic pivot toward physical AI is unlocking new, high-margin streams across RTX edge workstations, autonomous vehicles, and industrial robotics. Cementing this dominance, is absolute ecosystem lock-in. The VERA Rubin architecture isn't just an iterative update. It promises a 90% increase in rack-level performance per watt. This leap in efficiency has allowed management to confidently project unprecedented multi-year demand visibility, with a pipeline exceeding $1 trillion between 2025 and 2027. When we analyze the data center results, mechanisms of structural dominance become clear. Compute dynamics. Compute revenue hit a record $60.4 billion. Nvidia's data center revenue alone is now drastically outperforming the combined revenue of its competitors. More importantly, they are maintaining a 75% profit margin right through the Blackwell demand ramp. The networking monopoly. Networking revenue reached $14.8 billion. With InfiniBand revenue quadrupling year over year, Nvidia has created a highway lock-in. Every compute cluster requires this high-speed fabric, forcing a complete all-in-one ecosystem dependency. Customer divergence. For risk mitigation, revenue is now perfectly split 50-50 between hyperscale giants and the AC segment. AC serves over 250,000 entities globally, while Nvidia's internal AI cloud growth has tripled. Pricing power. When the entire China market vanished due to geopolitical bans, sovereign AI initiatives stepped in to perfectly offset the loss. Meanwhile, absolute pricing power is evident as cloud rental prices for H100 clusters continue to rise. Nvidia hasn't just won the consumer graphics war. They have outgrown the battlefield entirely. Over 15 years, they systematically dismantled the competition, expanding their market share from 61% to 93%. And hitting a suffocating 95% in the fourth quarter of 2025 alone. AMD's retail footprint has been reduced to a mere rounding error. With the war won, Q1 FY27 marks a ruthless pivot. Nvidia has officially retired gaming as a standalone reporting segment. To feed the insatiable demand for AI servers, they slashed next-generation RTX 50 production by 40%, weaponizing their monopoly to hike retail prices by up to 23%. Consumer hardware is no longer the endgame. It was simply the training ground for their data center empire. With the consumer graphics war decisively won, Nvidia's Q1 FY27 results confirm a ruthless strategic pivot. As we just saw, gaming is no longer the endgame. Now shrinking to a mere 6 to 8% of data center revenue, it has been fully absorbed into edge computing, a newly redefined pillar that just posted $6.37 billion. Driven heavily by high-margin enterprise workstations. But this pivot extends far beyond the desktop. It is about conquering the physical world. Nvidia's physical AI ecosystem has already surpassed $9 billion in cumulative revenue. By launching Halos OS and Isaac GR00T, they are fundamentally building the operating system for industrial robotics. Meanwhile, their alliance with Uber to deploy large-scale autonomous fleets proves that Nvidia Drive AV is ready to dominate the streets. To aggressively fund this leap from digital to physical, R&D spending has surged 52% to $7.6 billion. Nvidia is widening the gap, investing heavily in next-generation breakthroughs like 3D-guided DLSS, 5 neural rendering, and pioneering 6G AI-native networks alongside Nokia and T-Mobile. This scale of innovation is only possible because Nvidia has engineered a perfect money-printing machine. Operating with a 60% free cash flow margin, they generated $48.6 billion in pure cash, and they are returning it to investors with brutal efficiency, deploying a record $80 billion buyback program alongside a staggering 2,400% dividend increase. Ultimately, this immense capital and R&D converge on a single monolithic target, the VERA CPU. By directly attacking legacy x86 processors, the VERA platform opens a pristine $200 billion market. Featuring 88 custom cores, a massive 3.4 terabytes per second bandwidth, and 90% higher performance, VERA is the ultimate catalyst for a demand horizon projected to exceed $1 trillion by 2027. Looking to 2030, Nvidia enters the monolithic era, a multi-front war defined by 5 converging battlegrounds. It starts with a brutal infrastructure crisis. The Rubin NVL72 rack delivers a staggering 3.6 exaflops, but its 230 kilowatt draw instantly overwhelms 95% of global data centers. 100% liquid cooling and 48-volt power are no longer optional. They're mandatory to survive the extreme heat. This raw compute is paired with a ruthless push for inference dominance. Bypassing regulators, Nvidia executed a $20 billion acqui-hire of Grok, injecting 80 terabytes per second of SRAM directly into the Rubin architecture to crush the threat of custom ASICs. They need this absolute dominance because geopolitical fractures have erased China from their roadmap. A massive $16 billion H200 deal completely collapsed, paving the way for rivals like Huawei to train frontier models entirely outside Nvidia's ecosystem. To offset this geographic loss, Nvidia is aggressively taking over the physical world. Their historic Uber alliance will deploy 100,000 level 4 robot axes across 28 global cities. By driving operating costs down to just 80 cents per mile, they're threatening to disrupt up to 50 million drivers worldwide. And to fuel this monumental shift, consumer gaming has been sacrificed. RTX production was slashed by 40% to prioritize highly profitable server silicon. The ultimate evolution? Nvidia is now utilizing its own AI to autonomously design and verify the very next generation of its chips. Nvidia is weaponizing its balance sheet to build an insurmountable technological moat. Look at the exact allocation of their $7.6 billion in operating expenses this quarter. While administrative costs grew at a steady 21.7% CAGR, research and development exploded at 40.5%, reaching an incredible $6.3 billion. They are aggressively funding the next-generation VERA CPU and Agentic AI architectures. With $53.5 billion in operating income, this isn't cost inflation. This is compounding leverage, investing pennies to secure trillion-dollar monopolies. Nvidia's profitability transformation fundamentally rewrites semiconductor economics. After hitting a cyclical low of just 10% in fiscal 2023, net margins violently inflected, stabilizing in the mid-50s. Now, Q1 FY27 has shattered all historical precedents. Against $81.6 billion in revenue, Nvidia captured $58.3 billion in net income, an unheard-of 71% net margin. What drives this anomaly? Massive operating leverage and absolute pricing power. While top-line revenue exploded by 85%, operating costs grew at a mere fraction of that pace. Combined with the CUDA software lock-in, Nvidia is actively extracting software-level profits from physical infrastructure. Wall Street continuously moves the goalposts, and Nvidia relentlessly clears them. They have executed a flawless streak of 9 consecutive quarters with revenue beats and 0 misses. In Q1 FY27, their $81.6 billion in revenue crushed the $78.9 billion estimate by 3.4%. More importantly, the forward trajectory dispels any fear of a CapEx slowdown. Analysts project an uninterrupted climb, surging past the $100 billion mark by Q3 and reaching a staggering $124.6 billion by Q1 FY28. The multi-year demand visibility is absolute. Nvidia's earnings per share perfectly mirrors its top-line dominance, relentless and compounding. For 9 straight quarters, non-GAAP diluted EPS has beaten consensus estimates without a single miss. Surging from a baseline of just 61 cents, it crossed the dollar threshold and just hit $1.87, a definitive 6.5% beat against the $1.75 projection. Fueled by high-margin agentic AI workloads and the imminent VERA CPU rollout, Wall Street models this profit engine reaching $2.82 per share within 4 quarters. The execution remains flawless. Despite a flawless Q1 earnings report, Nvidia's stock faced a baffling week of selling pressure. Why? Market expectations have become essentially perfect. While Nvidia's $91 billion guidance shattered standard analyst projections, it only slightly edged out the whisper numbers held by major hedge funds. Simply put, Nvidia has reached a valuation threshold where great is no longer enough. It must be miraculous. This, combined with broader macro-driven profit-taking, as investors rotate capital amid fluctuating bond yields, triggered a necessary technical cooling. Crucially, we must distinguish between price and value. The structural outlook remains unchallenged. Among 70 analysts, 58 maintain a strong buy, with a consensus price target of $295.97. Looking at the extremes, the most optimistic forecasts project a surge to $500, while the most conservative floor sits at $180. Nvidia is no longer just a trade. It is the physical infrastructure of the AI era. Please note, all data in this video is for analytical purposes only and does not constitute financial advice. Thank you so much for watching. Don't forget to like and subscribe so you don't miss the next big thesis. See you in the next one.